Tuesday, February 11th, 2020, MONERO 64, home of alternative economics and contrarian views. A few days ago, I made a video about how the Aussie dollar was sinking to new lows versus gold, while today, the big one, the euro, has sunk to new lows versus gold. Why do I say the euro is sinking? Well, because that's what it's really doing. A lot of the headlines will say gold makes new highs versus the euro. I think it's better to say it the other way. And with that, I'm going to take a sip of my coffee in the ECB mug, or Fermez la BCE, or Herunterfahren der ECB, in French and German. It's my End of Fed version for ECB. And on the other side, I've got Christine Lagarde behind bars. And why is that? Well, because she was convicted 2 or 3 years ago of criminal activity by the French courts while she was finance minister in France. She was given a 1-year prison sentence. Of course, she didn't have to serve that. She went back to working as head of the IMF at the time. So if you're interested in this, you can go to my Teespring store. There are other mugs there as well. And the Bank of England, which is different, is shut down the bank's doors. And the Fed mugs, we got Billy Silverbug mugs as well. It helps the channel. Yes, the euro sunk to new depths yesterday versus gold. Gold, of course, is the ultimate yardstick and measure of value. It has been for almost 5,000 years. I think it's not really the right thing to do to measure it against the dollar, because the dollar is going to sink as well. Eventually, the dollar will go to new lows versus gold soon, I think, at least in 2020. And it's funny because yesterday I got a phone call from an old friend in the city of London. He's still there. And I hadn't looked at the euro versus gold at the time. And we were talking. He likes having a chat. He's really into the bond markets. And we were talking about gold. He has some gold. He's not got as much gold as I think he should, but it's his business. But he thinks gold should go a lot higher, even in dollars. But he also believes that interest rates are going to keep going lower. They're not going to let rates go higher. And he thinks that's going to be a drag, continued drag on the economies, which I thought was good from him. Because we think differently. But I get it, because the more debt they create to keep interest rates low, which is what they're doing, the central banks, the more burden of a burden on the economies that is. So the more debt, it's normal. If you, as a household, have zero debt and you're earning a good income, you can spend a bit more, you can do things. But if you got loads of debt, credit card debt and mortgage, a big mortgage to pay off, you're going to cut down on your spending. And that's what's going to happen with low interest rates. He's also convinced U.S. rates are going to go lower, U.S. Treasury yields. So, yeah, and then he said, I got an email from Citibank. He banks with Citibank. I used to bank with Citibank. And he was telling me about their rates for very large balances in euros. And Citibank here in London, you can have euro accounts, dollar accounts. That's one good thing about Citibank. You can have different currencies. And I was surprised and amazed at what they're charging people to keep these big euro balances. So it's the reality of negative interest rates. For example, from 100,000 euros to 200,000, they're charging 70 euros a month. So 840 a year. Let's say for 900,000 to 1.2 million, 600 euros a month. I know these are big amounts, But is it any wonder that the price of gold is going up or the euro is dropping versus gold? These people that have this kind of balance, they're going to do their homework. They're going to see what can we do to cut back on these charges. Basically, they're paying Citibank to lend Citibank money. And that money is not even their money anymore. It's because we know the law in banking nowadays. If you keep money with a bank, it's an unsecured loan. So it's not even a secured loan. It's not even legally yours, and they're charging you. So I did a little comparison with Gold Investments, which you all know I have a promo code for Gold Investments in London, and they will sell and buy gold bullion, silver bullion to anyone in the world, and my promo code gives you a 0.5% discount. They will also store it though and insure it. So I did a comparison: Citibank Euro credit balance charges versus Gold Investments gold storage fees. And these are for big amounts because I wanted to compare it to Citibank, but they'll also store smaller amounts for you at lower costs. You can always deal with them about this. So 100,000 to 200,000 euro, Citibank charges you 840 a year or 70 euros per month. So I did like something in the middle there, 140,000 euros of gold, which is around 3 kilos of gold. Gold Investments will charge you 200 euros per annum. So more than 4 times less. For €1,000,000, you're paying Citibank 7,200 per annum. You're paying them the privilege to lend them money. With Gold Investments, 21.5 kilos. And I did this at 1443, the euro, the XAU EUR, which is the gold price in euros, at 1443 per troy ounce. Gold Investments charges 1,200 euros per annum. Again, no comparison there. There's much lower fees. 4 million euros, you're gonna pay Citibank 25,200 a year or 2,100 a month. At Gold Investments, the equivalent in gold, 86.22 kilos. With the price at 1443, you're paying them 5,000 euros per annum. So, as I say here below, under the asterisk, use promo code MONECO64 to get 0.5% off the offer price for gold and silver bullion at goldinvestments.co.uk. Storage fee includes insurance, and gold is held in your name in an allocated account, and you can even go to Gold Investments in the City of London and they'll take you to the vault and show you your gold. The blue asterisk is for Citibank. And I remind you that all bank credit balances are unsecured loans to Citibank. So that's the reality of negative interest rates. That's why the euro is sinking. So let's look at the Eurozone bond market. Of course, there is no euro bond market. You have to look at the different countries. I'm going to look first at Germany. Germany has had negative interest rates for a long time, almost all across the yield curve. You can see here the red line. This was a month ago. It was negative all the way up past 15 years. But you look now, you go down to 20-year. In the past month, things have gotten worse. The yields have dropped. We're almost, down to the 20-year now. It's negative, or up along the curve to the 20-year. It's negative. It's negative 0.11, as you can see. So let's look at France. So a month ago, in France, you got negative interest rates or yields all the way up to the 7-year. The 10-year wasn't quite negative, but now it is. French 10-year now minus 15 basis point. Then we look at Spain. A month ago, they also had negative interest rates. Yeah, all the way up to 5-year, and now it's creeping onto the 7-year. So the 7-year now is minus 3 basis points. So you can see how all these rates are going lower. And why is that? Well, I think it's because of the bank charges like Citibank. Those charges add up to around almost 1% a year negative. It's around 0.8, I think 0.82 or thereabouts. So what these wealthy individuals are doing, they're rather lose a little less buying German, French, or Spanish government bonds than putting it in the bank and losing more. It's crazy. So let's look at Greece, which is quite amazing as well. Greece, we know Greece almost went bust some years ago, and now for 10 years, they're only paying you, the Greek government only has to pay 1%, while the US government pays a lot more. It doesn't make sense, right? So yeah, look for Greek yields to drop. People might buy Greek government bonds instead of losing with the German, French, or Spanish. Right now, for example, the 6-month yield in Greece is 0.38. So yeah, for 6 months, maybe. So that's what's going on. That's the reality of negative interest rates in Europe. And that's why the price of gold is going higher. And I think it's going to go even higher. I think people are going to wake up to the fact that gold is a good alternative as well. I think a lot of people are not aware of that. They're still focusing on government bonds. They think that they're safe. But they only need to look back at 2012, 2013 to see that they're not safe. And by that, I mean the European sovereign debt crisis, where yields spiked higher and bond prices dropped. So that's why, yeah, gold is going to continue to, well, it's actually not doing much. It's the currencies that are sinking, as I've said many times before. So let's finish off looking at the markets this morning. It's 10 to 8 a.m. London time. Just a quick reminder before I look at the markets. We've got Fed Chairman Jay Powell testifying today to Congress from 10 a.m. Eastern time. Is the semi-annual testimony to Congress on the economy and monetary policy. Used to be called the Humphrey Hawkins testimony. It's an important one. It was the one where Ron Paul asked Ben Bernanke why they didn't use diamonds for gold reserves. Why'd they use gold? And Bernanke said, didn't say it was because gold was money. He said it was because it was tradition. It was during one of these testimonies. So right now we've got spot gold down slightly, down $3 at $15.69. Range has been $15.66 to $15.73. We've got silver up 3 cents at $17.79. Range has been $17.72 to $17.82. So the metals remain fairly steady at the moment, in dollars, of course. The Dow is up 82. Yesterday, the futures were down before the open. I remember my friend called me just before the U.S. markets opened. It was at just before 2:30 London, which is 9:30 New York. And at the time, I was looking at the screen, and the Dow was down like 100, the Dow future. And then I all of a sudden I'm speaking to him. And I look at the screen, and it's up. It's like unchanged. And I look at the time, and it's just after 2:30, just after the open. So it ramped up on the open So that's the stock market at the moment. So yeah, the Dow up 86, S&P up 10, or up 9 actually, or 1/4% at 3361. NASDAQ 100 future up 0.4. And the currencies, the pound rallied a little bit yesterday, a little bit of a short squeeze maybe. It's still fairly weak at 129. The euro, of course, dropped also against the dollar and gold yesterday. What does that mean? Well, gold went up in dollars and the euro went down versus the dollar. And that's why the euro, as you can see here by this chart, made an all-time low, or gold made an all-time high versus the euro. Right now, the euro is steady, 109.13. Do I think it's going to parity or 1-to-1 or even down to the all-time low of the euro around 82 US cents? I'm not too sure about that. Some people seem convinced that it will, but I think before that happens, the Fed's going to have to start cutting rates again. So it might go down to 105 in my opinion, but don't think it's going to go that far down against the dollar. And I think gold is going to continue to go up versus all of them. Dollar is slightly stronger versus the Japanese yen, 109.90. And the dollar is down 0.1 versus the Chinese yuan, 697.75. WTI crude back up above 50. It's up 0.85% at 50.15. US 10-year yield. Yes, it's still fairly low here. It's at 158. It is up 3 basis points overnight though. What about the repo market? What's going on there? Is the Fed still intervening? Yes, they are. They rolled over another 38 billion of overnight repos. And just to remind you, they're not adding these 38 billion every day. So you don't add them up. They're just rolling them over. The important thing to look at here is whether these rollovers increase. If today they announced that they rolled over 50 billion, then that's not a good thing. That means that things are not as stable as they should be in the financial sector or on Wall Street. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, DTube, Steemit, and Facebook. And just to remind you, I'm being interviewed today at 5 p.m. London, midday Eastern Time by Lynette Zhang of ITM Trading. I'm looking forward to that. I think it's called Coffee with Lynette. So you won't want to miss that if you enjoy Lynette Zhang as well and watching me. So I wish you all a great day. Take care. Bye.